Welcome back. Just a word on the market. It's very quiet. I mean, not much has changed, to be honest. But there are some stocks that are hitting fresh 52-week highs. So just wanted to bring that to your notice. Polo Tyres is at a fresh 52-week high, post a good set of numbers. So that's building on in terms of both volume as well as price action. Ambuja Cement is at a fresh 52-week high as well. Exide, Ujjivan are all sitting at fresh highs this morning. And then you have a couple of others in the broader markets like an Akzo Nobel. So just keep an eye out on that. But talking about numbers, you have JB Chemicals that reported its earnings. Let's get a quick word in from the management. It was a strong set of Q2 earnings. Revenues rose 36% versus last year. The domestic formulations business saw a near 50% growth, which is well above expectations. And the India revenue business was driven by brand acquisitions. Nikhil Chopra, who's the CEO and whole-time director at JB Chemicals, joins us now to talk about that. Nikhil, thanks a lot for joining in. You know, earlier when we spoke to you in September, you had said that you see a growth of 18 to 20% in the India business for the full year. Do you hold on to that target? Would you want to change it either way?
Thank you, Sonia, and thank you, CNBC team, for inviting me on the show. We continue to hold our guidance in terms of the growth for H2 part of the year, that is high part of the teens. And if you look at what IMS is talking about JB's performance, we continue to be the fastest growing company in top 25. Market is growing at around 3% and we are growing at around 16%. This entire growth is backed up by the work that we have done in our organic business, with our big brands only getting bigger. All our big brands have gained market share, and also a handsome traction in our inorganic assets that we have acquired in last 6 months. That is what is being demonstrated in the growth for India business.
So this inorganic acquisition that you spoke about, do you have any more plans on that front? If yes, what would the war chest be and what can we expect over the next 6 to 12 months?
So we continue to evaluate assets, Sonia, in terms of assets which are available in the market, and at the right time we'll be more than happy to share if there is any opportunity which is coming on the table. But more so, we are looking at inorganic opportunities more in the world of cardiology, nephrology, respiratory, pediatrics, as we have done in the earlier part of acquisitions. That is what I can share at this moment of time.
Hi, Mr. Chopra. Good morning. Should we expect an announcement sometime in the next 6 months?
Niger, what I have shared is in terms of whenever the right time comes, we'll be more than happy to share with you.
We thought we'll probe you a little bit, in case are you hot on a deal or something, but we'll wait for that announcement. I wanted to ask you about a smaller part of your business which is growing. That's the CMO business. Could you tell us what is the targeted contribution you're looking at, say in the next few years, say in the next 2-3 years odd? And if you could tell us what is the margin difference as well? Go ahead.
So earlier also, Niger, as I have shared, that two parts of the business, that is, first let me more talk about India business, where today our contribution to overall business is 52%. We would like to take this to 16% short to mid-term in next 2 to 3 years. That is what we will see. Coming to CDMO, a couple of quarters, if you look at quarter 1 and quarter 2, we are happy to share that we are now hitting a century in terms of revenue, 100 crores plus. And that aspiration for CDMO business with that partnership that we have with some of the big multinational players to take this business contribution, which is today close to 12%, to around 20%. That is mid to long term. And this is backed up by some new developmental work that we are doing in the world of lozenges, where we are the third biggest manufacturer of medicated and non-medicated lozenges. We have all the capabilities, we have all the capacities to manufacture lozenges, and also good partners. And in addition to that, we are also looking at how to add more number of partners in this entire world of CDMO.
So from 12...
equally talking about margins.
Yeah, go ahead.
From 12 to 20% in next 3 to 5 years, depending upon... So this business, Niger, has its own gestation period in terms of developmental work. Develop a product, you share with your partners, they do their own research, they come back to you. There are some changes which happen.
Yes.
So we are fortunate enough, by the way, to add Reckitt as a partner in last 6 months, in a time of 6 to 8 months.
Yes, Mr. Chopra, you were making... Yes, Mr. Chopra, you made that point. What about on margins? You were telling us about
good margins.
Yeah, go ahead.
Good margins as compared to where we stand, overall margins for the company. Better gross margins.
By how much, sir? If you could give us a rough number, how much better?
We don't specify margins of a business, but it's healthy margins. More than that is what I can share.
Okay. On the top line, right, you've done about 1,600 crores and it's been a very good first half for you. Over a 30% growth is what you've seen. On this base of 1,600 crores, what can the growth look like in the second half of the year?
So if you look at, Sonia, the run rate for India business, which is contributing around 50%, is now 400 crore plus. The run rate for CDMO business is 100 crore plus. So for second half of the year, we are looking at that we should be close. Quarter four for India business is somewhat soft because 50% of our business is acute part of the portfolio. But still, we should be good enough to score and touch a new peak this year of around 3,000 crore plus. That is what I can say at this moment of time.
And these acquisitions, I mean, you said, right, that you're scouting for something. You're, of course, not giving us any more details, but will it put more pressure on your debt? Your net debt is about 150 odd crores. What will the debt look like, say, 12 months hence? And will these acquisitions be in the range that you have earlier done? I mean, you've done about acquisitions between 250 to 600 crores. Is it in that range itself? Are you looking at larger acquisitions this time around?
It all will depend upon what is available on the table, and if we have the ability to turn around. We are more looking at opportunity from a perspective of string of pearls. That is what we have done. From a debt issue, I think we are rightly balanced. We'll be able to generate enough cash, which will help us in terms of looking at acquisitions, and we can also look at raising funds. So that is not an issue for us in terms of if we have the right opportunity in terms of what we want to acquire, depending upon what is available in the market.
All right. Mr. Chopra, thanks for joining in. But just want to clarify one point. You said the India business, the contribution goes from this 50% to?
60%. Short to mid-term. In next 2 years, you should see this happening.
Okay. All right. Good speaking to you. Thanks so much for stopping by and filling us in with all of those